Happy Labor Day, as today is the 5th of September, which means tomorrow things could very easily start to pick up. And right now we're holding above this significant Fibonacci level at roughly at around 42 and a quarter. That level will be really important to hold in or around that area. Within the 6 hour or quarter day chart, significant breakout point occurred last Friday after it found a nice support hold at this level here at 41 and 1/3. That tells us that the selling from point A to point B is that of a failure. It's a failure, and actually this is from this point here, excuse me. So from this point to this point, it shows that this move did not fail. Yes, it went below it, but it didn't hold below it. Thus, this move breaking above here keeps the market in a bullish state. Now, for this level in here to be a failure, the Fibonacci levels are just a little bit different. The first one is 42.05, somewhere in or around there, and then 40.77, which would be somewhere in or around in here. So from this point here to this point in there, it had this resistance level where it stabilized within and then got above. So that stopped it from being bearish. So for this move to be a failure, it needs to have a confirmation break above here. And it's holding well enough right now, showing that the selling at around the 22nd of August to be that of a failed move. Within the weekly term time frame, this is really what's telling me that this thing is really getting ready to make a nice little move towards the upside. It's breaking nicely away from this 18 period average band where it has spent some decent amount of time correcting. When did the correction start? Well, there's a couple different levels. You can really say it started in here. And from this point to really here, nothing happened. And then the bull market starts right in there. So we had a long period of correcting sideways. Basically, I think the easiest way is saying you had a correction through price over one candle. You had a correction through time over, you can't count the big red one, so 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 weeks. That's roughly a little over 2 months. And then we have what's starting to make the breakout pattern, and there we go. And the next big level is the $50 mark. Now, what would be ideal? And there's many different ways that things can work out on a positive level, is to have a move up towards the 50 and then find a way of having a support test at a significant higher level. One way is 38.2% from this low to this high, which would work in around here. But the key levels of previous resistance, the right in here, 42. That's the huge one. If it can go to 50 back to 42, then that would be super strong. And in itself, $8 off of 50, that's over 15% of a reduction, which would be a correction within a higher low. Because with the pattern of these lows, these are the higher lows that we can be talking about right now. The first one is the breakout lows. That's $17.75. This low, 26 and a third. This low is 32 and 1/3. So if the next low brings us up from 50, then up to 42, then that would classify as that of a higher low. Alrighty, thank you for tuning in on this Labor Day video. The blog will not be updated today, but it will be updated on Tuesday. Thank you and have yourself a great week. Bye-bye.